Thanks very much, Nzinga. Well, as you did mention, all markets really looking at what U.S. President Donald Trump will reveal in terms of his tax reforms. There's talk that corporate taxes could come down from around 35% to 15%, which is a massive drop if that's true. And also the repatriation of funds that are sitting in other countries. There's talk about levying a once-off 10% tax on those funds coming into the U.S. economy. The hope, obviously, is that all these funds will actually go towards making America great again, to quote the president himself. But we have to wait and see what the exact numbers will be later today. Locally, the all-share index was trading largely in negative territory, but has just popped into positive territory. Your mining and your financial stocks still not having much of a good time, although we have seen some progress on the mining stocks front. The Rand fast losing ground, not really sure why. That's flirting with around 13.20 against the dollar. And in company news, Impala Platinum has warned the market that it may have to cull jobs at its Marula mine. Let's take a look at the indicators. Well, I'm joined by Michael Traherne. He's from Vestact. Thanks very much for joining us as ever, Michael.
Numpo, great to be here this Wednesday/Friday afternoon.
Indeed. Now, South Africa always gets absolutely hammered and slaughtered and criticised for any fiscal ill discipline. And yet the US, which has debt of about $17 trillion or whatever it may be, is planning on making massive tax cuts. I mean, is that really responsible? And when that money actually does become free in corporate hands, is it going to be used for the right purposes?
Yeah, so lots in that question there.
That's
I think
right.
The first thing to point out is that the US pays almost less than 1% on all their debt, where South Africa is paying close to 9, 10, 11% in our debt. So quite a big difference there. And also they're the world's largest economy, so they've got a huge tax base to tap if they really need to. So from a risk basis, South Africa is very small compared to the US. Wells Fargo had numbers out the other day, and they got $1.3 trillion sitting in deposits just in their bank. That's 4 times the South African economy, and that's just one company in the US. So just from a size perspective. But then the debate now shifts to, you cut tax rates, okay, what's the next step? You get some growth, okay, that's not debated. What is debated is the growth enough to compensate for the loss in taxes? So do you grow out of it and raise more taxes because of the growth? And look, research is a bit 50-50 on this, but it probably leans towards cutting taxes actually means you raise less money in the long run.
So if that's the case, it means that the US goes deeper and deeper into deficit. So, I mean, is that okay?
Yeah, look, I think that's where the US Congress has to step in and decide what they want to do. So we'll have to see, does Donald Trump come out with his tax plan this afternoon? And then the market will look at, are the proposals able to actually even get through Congress? You're going to find the Democrat side of Congress very averse to cutting taxes, particularly if the taxes are going to impact on social welfare. So already almost half of Congress is probably going to push back against some of the tax cuts. What does Donald Trump's own Republican Party think of it? So those are the things that you're going to have to see. And then if you cut taxes now, it doesn't mean that you can't raise taxes later if it's not going according to plan. Look, that's not great from a market perspective. You want certainty. But I think from a business perspective, if you cut tax rates to the 15% from where the 35 is, then all of a sudden it's less likely that companies are going to keep money offshore, because all of a sudden the difference between your tax haven in the US, that difference is a lot smaller, and it makes sense to bring money back. When you take Apple, for example, Apple's got over $200 billion sitting offshore. They actually had to raise money in the US recently just to pay dividends because of where the money was. They couldn't access it to pay dividends. So that's inefficient from a business perspective. But I think a tax rate compared to where the US is globally, I think a lower tax rate is probably better for the US over the long run.
Okay. And then here at home, there's a discussion about the wealth tax. The Davis Tax Committee has begun to engage the South African public about whether we should have a wealth tax over and above a number of taxes that we experience, like estate duty and so on and so forth. In your view, do you think we're going to see more capital flight if this actually does hold sway?
Yeah, look, I think there's enough research that points to as soon as your tax gets a bit over the 50% mark, people who are in that wealth tax bracket have means, they have access to different channels. And if you're charging people over 50% in tax and a wealth tax, in effect, you're saying we don't actually really want you here. We're making it hostile for you. And then people go, okay, well, we live in a global village. It's easy enough for me to move away. So I don't know. It's always a fine balance. You do want people to support the poor. But I think at the moment you're already seeing the tax burden is on only a few individuals in South Africa, and do you really want to alienate them when we do have a skills shortage? I'm not so sure, but that's why we have these commissions, and the Davis Tax Commission is far more skilled in these things than I am, so I think let's leave it up to them.
And then Impala Platinum announcing that they may have to cut jobs at one of their mines. The platinum sector, PGM's not really doing that great. Would you invest in that sector? And what's your general view about Impala Platinum and how it's managed?
Yes, I mean, that's not great, particularly for the community around that mine, given that the people that work at the mine are probably from the community, but also because the community have stakes in that mine. But the reality is, at the end of the day, that if you're not making money, you have to cut back costs, and maybe I think they're proposing laying off 1,000 workers. Laying off 1,000 workers might guarantee the jobs of a lot more people. So that's the tough choices that you have to make. I think as far as platinum goes, it's not something we invest in. You take Lonmin, for example, over the last 5 years, they're down 99.86%. So as a shareholder, you've been obliterated, and that's just because yes, mines make money in stages, but it's very cyclical and it's very difficult out there. I think if you invest at home, try something that's less cyclical, you won't pull your hair out.
All right then, Michael, thank you very much for your insights there. Well, that was Michael Trehan. He's a portfolio manager at Vestact. After a short break, Nzinga has more business news for you.